Hi members, and welcome to another Macro Monday. My name's Mitchell Snedden and I'm joined by Callum Pickering. Callum, just a first question. I'm potentially looking at investing in an S&P 500 exchange traded fund. I want to get that broad US exposure into my portfolio. My biggest concern right now though is what do I do about the currency? Should I be looking at a hedged ETF or an unhedged ETF?
So what we're looking at here is you've got to look at the forecast for the Australian dollar over the next, say, 6 to 12 months, or potentially just over your investing horizon. Now, in the spirit of full disclosure, I'm long the US dollar, have been for a few years now, so I expect that the Australian dollar will depreciate against the US dollar over the next couple of years. There's a few things that investors need to look at when they make this decision. The first is commodity prices. Now we know that the Australian dollar is a commodity currency. It tends to fluctuate wildly depending on what's happening with iron ore and coal prices, and this is something you would need to look at quite closely. Now, my personal view is that commodity prices are likely to decline over the next 3 to 6 months based on what I'm seeing with the Chinese property sector. And if that happens, you would naturally expect the Australian dollar to decline back to the low 70s range against the US. Now, the second major factor is going to be the Federal Reserve. Now, they're widely expected to raise interest rates at their December meeting. And what that is going to do is it's going to reduce the spread between US interest rates and Australian interest rates. Now, if that happens, you would naturally expect the US dollar to appreciate against the Australian dollar, and that could prove beneficial for your portfolio.
Excellent. So for now, unhedged, but let's check back in that with that in a few months' time. Now, moving on, Callum, we've got a bit of some data coming out this week. We've got housing finance, we've got building activity, we've got commercial finance. If we tie all these together, what kind of a picture is it painting?
Yeah, so let's begin by just focusing on the lending figures. So we're getting new mortgage lending. Now that provides important insight into the housing market, particularly house prices. Normally, if lending activity is declining, usually you see house prices follow, and that's what we're beginning to see at the moment. Over the past year or so, mortgage lending has been somewhat weaker and is beginning to feed through into the Sydney and Melbourne markets, which are somewhat weaker than they were over the past couple of years. Commercial lending is also quite important. Now, it isn't normally market moving, but it provides important insight into business investment. And what we've seen over the past 12 months is a really steep decline in commercial lending activity. And if that continues, it suggests that the economic transition that the Reserve Bank is trying to orchestrate, particularly as it relates to business investment, isn't going as smoothly as they hope.
Okay, now sticking at home here, we've got the RBA this week coming up with its financial stability review. What does it actually mean, and what are you anticipating? Again,
it's not normally a market moving event, but it does provide important insight into what's happening with the financial sector and where the major risks are. Now, from a market perspective, and certainly with regards to what the media usually focuses on, it's usually what's happening with the housing market. We want to see whether defaults are higher than they were 6 months ago, have any other risks emerged within that space that could create some problems down the road.
Okay, now, and just finishing up, last Friday we had the US come out with its employment figures. Hasn't really moved the market too much. I think at the time of recording right now, the Australian market's up about 20 points or so. What impacts does this likely have going forward though?
So non-farm payrolls came in a little bit weaker than market expectations on Friday night, but not materially so. So we didn't see much market action around the data release. It was good news for the Federal Reserve though, because the result was strong enough that it means that they're still on course to deliver that rate hike that they've been promising for the last 12 months. So the December meeting is definitely live at this point, and it's something to keep a look at, because if the Federal Reserve does go ahead and raise rates towards the end of the year, it's going to definitely be market moving.
Excellent. Well, Callum, thanks for joining us, and members, thank you for joining us on Macro Monday.